This is the Royal Financial Investment Group. As always, this is your host, Prince Dykes here, coming to you guys live with another great video. Well, this video is, well, as always, don't forget to like, subscribe, comment, share, all that good stuff like I always say before every other video. But I don't have a lot of time, and I definitely know you guys don't have a lot of time, so let's jump straight to this video. So this video is options trading 101, part 3. And this kind of came about because I got an email from Dominique. I think it was Williams. Excuse me. Uh, Forgive me, Dominique, if I got that wrong. But so my Dominique Williams said, "Hey, the platform has kind of changed up a little bit, and could you walk us through and do another video?" And what I said, I mean, of course I can. But then I thought about it. I said, you know what? I did do an options trading 101 and 102 video where I was kind of talking about the whole idea of options trading, getting people ready. Then I thought about it. I said, hey, I can do a video like this and it can pretty much be the part 3. So bam, here it is, part 3. So now that if you go back and you see options trading 101, it's going to tell you part 1 is going to kind of introduce you to what it kind of is, give you the psychological piece of what it all kind of means, broken down to where us common people can understand, like every other video I do. And part 2 kind of takes it a little bit further. Now it's part 3. We're going to apply this stuff and we're going to be able to see it. So first of all, there are levels to it. Excuse me, my voice is kind of sorry about that. Excuse. Um, as we know, there are levels to option trading. So just because you have an E-Trade account doesn't mean that, hey, boom, I got an E-Trade account. Yesterday I followed your video. Now I'm going to be able to go ahead and get me an option trading. I want to go buy some calls, puts, other stuff like that. So first of all, it's levels to it. So what you're going to do is, like, for example, I type in option trading levels, right? I type in option trading levels. You see this one right here, it says option trading levels. You click on it. You have to apply for an option trading account. So you can see what level 1 does. Covered calls, including, whatever. You can read all that yourself. It has level 2, level 3, and all the way down to level 4. And the reason why you have to fill out an option trading application, let me show you guys how to do that as well. Option trading application, when you fill that out, that's pretty much going to tell you you got to apply for an account, right? You type in option trading application up here. Option trading application. I think I spelled application wrong, but yeah, it got it right for me. Then you're just going to go down here to steps 1 through 4, start your application. You click on that, and that's how you start the application process. It's just like any other application you fill out or whatever. Uh, that's how you start it. Not going to walk through that one all in detail. So now that you have it, it's going to take a couple days for you to get it. Once you have the ability, now, Prince, let's get to what the video is really about. But I want to make sure I bring everybody up to speed. What are the levels to it, how to apply, all of the good stuff like that. So let's jump straight into it. So let's type in a stock. Let's use Apple. Since it's the world's, well, United States' largest company. I think it's pretty much the world's on too. 700 billion in cash right now. I think the last earnings report said we got to be a little bit over 700 billion. But anyway, so when you pull up a company, how you get to options, you're going to see a thing right here called options, right? So when you click on the word options, first of all, you have your expiration dates, which is, you can see August 7th, August 14th, August 21st, so on and so on. You want to go a little bit further, you can just click this button over here. But let's go back just for the purpose of this video. You just click on them just like this, right? And it'll switch over. Now, this tells you, it says, hey, what do you want to see? Do you want to see calls and puts? Do you just want to see calls? Do you just want to see puts? Straddles, collars, don't worry about all that. I'm not going to get too far in all the iron condors and different spreads. But usually I like to see it this way. Calls and puts side by side. So here you have the call side. Here you have the put side. And then this will tell you how many do you want to see, right? Because right here it's showing you 7. So I usually kind of like to break it down to 11. I don't like to see all because they put too much in. Now, if you want to change it, it's saying, hey, you want to get the strike price of 11 of them close to what? You can change this because right here, as you can see, This is 21 where it's pretty much, this is where the stock closed out at. So this is where it's putting it at, right? So if you can change this to say, hey, I want to see what's near to $130, $140, you can change that and hit the go button, right? And it's going to give you the 11 that are close to that strike price that you said. So boom, that's simple and easy, right? So now you have your calls, you have your puts. You're like, well, why is this blue and why is this white and all of those stuff like that? On your call side, this is what people refer to as in the money, right? Blue is in the money because you see the stock trading at 121. So these stocks are considered to be in the money, right? Now over here on the call side, these are considered to be out of the money. Why? Well, why is it out of the money? Because it's a stock trading at 122, 123. No, but as the stock goes up, these would turn blue over here, right? So the stock has already passed these prices because right now it's trading at 121. This is was considered at the money. ATM, you see people say at the money. So this blue side here is considered in the money. This is considered out the money, right? So it's the same thing on the reverse side on the put side. Remember, the call side is bullish, which means I think it's going up over here. I think it's going down over here. Now, for prime example, you can see the stock went down 0.87%. You can look and see the call side is red, the put side is green. Why is that? Boom, you guys smart already. Look at this. You guys learning every day. Because the put side is, hey, when the stock comes down, the put side makes money. The when the stock goes up, the call side makes money and the put side goes down. Reverse side. Simple and easy, right? Now when you look at this, let's say if you're saying, hey, man, I want to go buy me a call. You hit the trade button. Once you hit that trade button, your account is going to pull up, right? Now, if you want to see how much money you have, you can click on this button right here that's called Purchasing Power, and it'll tell you how much money you have available in your account. Then you go down here. If you want to buy it, you're going to buy it open if you're buying them most of the time. How many contracts you want? 1, 2, 3, 4, 5. The expiration date and the strike is already selected in this case because we clicked on it earlier, right? You select your price type. I got plenty of videos telling you guys what all this means. But let's say you put a market. And then the market's closed right now, so I can't do it. You got to put a number in. And boom, that's simple and easy. You have brought a call, right? You say, oh, Prince, that's cool. Well, let's go see, how can I buy a put? I think Apple is about to drop tomorrow. It's about to do horrible, whatever, blah, blah. Cool. I want to buy a put. So you're looking at this. I'm going to break this down too. So you got to keep in mind, this says $2.18. Now, how many contracts or how many shares are in a contract? 100, right? So if this is saying $2.18 times 100, which is $218. So to buy one contract is $218. Keep that in mind. When it's saying $2.18, it just doesn't mean $2.18 for the contract. It's 100 shares inside of a contract. Keep that in mind. So that means $218, right? So that's what the bid is. That means that if you're selling it, that's what you can sell it for. The ask is, if you're the buyer, this is what you're going for, 224, right? It's just like, when you go to an auction and it's like, I got this for $1, I got this for $1, I got this for $2 over here, I got it for $2, I got it for $3 over. The same thing, right? People are bidding, the people, the slogan of buy low, sell high. The people that are owning the stock, they're saying, hey, I sell it to you for $224. And you're saying, no, I buy it for $218, right? And that's how you negotiate. Now, the difference between 218 and 224 is what's considered to be the what? Man, you guys are geniuses. It's the spread. The spread is the price that's between it. If it has a large spread, that means that the volume is probably low, right? If it has a low volume, that means it is not getting a lot of activity. That's like somebody saying, hey, I got this for $1. 5 minutes later, hey, I bid $3. See, you're going to have a wide spread there because it's not a lot of volume. Volume is how many times is it being turned over, people going in and out of it. So if you have a small spread, that means that a lot of people bidding for it. It's like, I got it for $1 over here, $2 over here, $2.50 over here, $2.25 over here, $2.30 over there. It's not going to be a wide spread when you have a high volume, right? Just something just for you know. And last means that, hey, today the last trade or the last time this was sold, it sold for 218. So it's saying, hey, it was sold for 218. If you want to sell it, you can sell it for 218, and this is your ask or whatever, right? And the net change is just telling you from the start of the day until the last trade. This stock has changed. This contract has gained 67 cents in value. So 67 cents is really $67, right? It's saying 67 cents per share. How many shares in the contract? There we go. Now you guys got it. 100. And 100 times 0.67 is $67. So it's telling you like, hey, from the time the market opened up today until the last trade, it has moved 67 cents, which is $67, right? And that's when you can hit the trade button. I want to buy a put. Hit the trade button. When you hit the trade button, same thing you did on the call side, but you're buying puts. And when you look at this right here, it's giving you the bid right here that we saw earlier. We give you the ask. It's telling you the volume, and it's telling you the open interest. It's telling you what it is, how much this has moved. It has moved 44% today, right, on the puts on Apple. And that's where you can look at it, and you just put in what you want, and you can buy yourself a put just that fast. Let's go back. Let's see what else is on this chart. It's more to it where we can look at Greek symbols, but I'm not going to, Greek symbols and spreads and all that other good stuff. But we're not going to get to that. This is just 103. Now you can look at the details as well, or you don't even have to click on it. You can just hover over it, just like I did earlier. Just hover over it. So when you're making your selections, you can look at the details as well, right? This tells you up here. I can't go up on it, but you can see it'll tell you what it previously closed at, what it opened at, what was today's high, what was today's low, days to trade. That means to tell you how many days before it expires, the option multiplier, delivery, the deliverable of 100 Apple shares or whatever you're buying the contract. So now, when you're looking at in the money, these in general, these have a high delta, which means that usually these move faster on the call side. In the money calls usually move faster than out of the money calls. You kind of can see it up here where this will move 85 cents, but down here move 9 cents. So usually if you want to make, your money, you want to make or lose your money faster, this is where you want to get the bigger moves. And on the put side, the out of the money is what's considered to move faster as well. So keep that in mind. The blue on each side is usually the ones that have a high delta, which is the Greek symbol that tells, the volatility of how the stock will move or whatever, who will move, who will gain the most. I'm not going to get too crazy into that. So I think that is enough. That can tell you how to buy a call, how to buy a put, what the strike price is, right? This is your strikes right here. What the strike price is, the ask of bids, the net change. We went over volume, how to buy them. I think that should be good. But anyway, if that's not, don't forget to like, subscribe, comment, and share. Definitely, I'll probably be coming up with a 104 to go a little bit further. But that should get you started. 103. Don't forget to share all the good stuff. Let me know if it was good or bad, if it was horrible. Let me know if I suck. But anyway, thank you guys for watching. Until the next video, you know what to do. Be safe.